What's going on, all great investors? In this video, we're going to go over Palantir as a short position. But before we jump into that, I want to quickly just give an overview of what I'm thinking. So yesterday we had covered Alibaba stock, and we kind of determined that it was a little bit undervalued and it might be worth putting a small bet on. So you can see here we allocated about 3% of our portfolio to that position. Uh, the stock is trending, and we basically caught the trend, and we're up 6.3%. No interest in selling Alibaba stock, but I was thinking that it might be a good idea because this is Alibaba is kind of an AI play in our portfolio that we could try to hedge our bet by selling short another AI stock. And since we have already covered TSM and Palantir, it might be okay to try to hedge out some of the risk of our portfolio just for like market volatility purposes. Might be fun to actually discuss that. So in this video, I'm going to demonstrate how I typically go about my short positions. So I feel pretty comfortable, maybe trying something on Palantir, and I'll explain why. So if you have not already seen the first analysis of Palantir, go back and watch that video. If you have already seen it, stay tuned. So we'll go through how I kind of plan my shorts and, use the watch list feature to organize my positions. Okay. So the first thing that I'm going to do, we've already done all of the fundamental analysis for Palantir. Okay. Now I'm going to make this a little bit larger. I'm looking at the chart on the right. This is TradingView. For you guys that don't know, I'm using TradingView. It's a good little site. What I'm doing is super simple. I think that Palantir stock is worth, $65 to $75 a share ish. And yes, there is a chance that this could be worth $280 a share. We've kind of touched on that. But it's probably going to pull back. It's not going to go straight up, or stocks don't go straight up and they don't go straight down. So how I typically go about, putting together a bet on something like Palantir is I use this Fibonacci tool, right? So Fibonacci retracement tool. And I typically use something what I call the 3-day rule. The 3-day rule is just like the high and low of 3 days. Typically you want to do it, a nice gap up like this is nice, a nice time to try to put that tool on. You can also, let me show you on something like this. Let's say you're thinking about a longer term trade. This is a short term trade. For shorter term trades, I use shorter term, Fibonacci highs and lows. If I was thinking about a really long term trade, I would go all the way to like maybe something like this. What is the high and low over a few years? And then you can kind of see it's not always going to work perfectly, but you can kind of see this is the breakout, and that's just a fact. This is all-time highs. When stocks break out all-time highs, they're going to extend. That's how stocks move. They like test what's the next level. What's the next level? And you can kind of see how it did, this isn't perfect, but it did kind of get a little wobbly here. And then it decided, oh, yeah, we're going to break out again. So I don't want to try to be too early. This thing is a rocket ship. This is a weekly chart, and I don't know how to describe it, but it's the way stocks move. It's like when they go, they go. So this is breaking out to all-time highs here, and it's like, oh my gosh, this thing is really moving. It moves quickly. This is 1 week, 2 week, 3 weeks. Bam. I mean, it jumped a sizable amount, And then it kind of, consolidated here where it was like, okay, let's see what we have for leg 2. Oh yeah, we're ready to go. And as you can see, the distance on these extensions gets larger and larger. So with each break above, you get a larger move. That's why shorting stocks is so difficult when you're shorting stocks. You don't really want to short stocks when they're at all-time highs. So I don't want to like break a bunch of rules here, but I'm thinking we might be able to catch a little bit of a pullback on Palantir. So basically, my original idea of like, okay, why might I try to short this at this time? This breakout level, if you double it, it's $90 a share. Okay, and then if you triple it, that's 45 times 2, 90. 45 times 3 is 135. So generally, if a stock goes up 200%, kind of a little rule of thumb is like, oh yeah, I'll start watching it then. So maybe I am a little bit premature here. Maybe 135 is up next, but maybe it's not. I'm gonna show you the whole process actually. Let me start. Now that I've kind of described what is possible, let's add an entry. We're gonna do Palantir short. Okay, and then we're gonna say, let's just say we're gonna play it for 1 year. We're gonna try to hold it for 1 year. We're gonna use a stop out too, but let's go 113, 213, and then 2026. Our entry price is 117.39. So now we're gonna discuss like coming up with the price targets. So first off, let's start with the stop out price. Let's say that we want to use 135 as a stop out. That's a little bit above our double extension. I call it a double extension. I have no clue what it's really called. Okay, I don't know. I use these tools in my own way, in a sense. Okay, and let's say there's a 50% probability that we get stopped out here. Now, let me show you how I come up with where I'm aiming for on the rewards. I think 105.04 is the first price target. So 105.44. I think there's a 30% probability we get that. And then after that, let's say 91.76, which is an extension on the downside. And then the 200 moving average is $45 now, but let's just say we think that the stock is worth about 65. So let's just say on a best case scenario, we get $65 a share. And there's a 5% chance of that. And then 15% chance of this. So the situation is Palantir is red hot alongside AI. Stock is getting overextended. A lot of short sellers are already bent, meaning they were already trying to short this at 69. They're already trying to short this at 45. Already bent because they are trying to short a thematic move on valuation. That is very silly. Never try to short themes on valuation. ... You will get ran over by the crowd. It's kind of like what you see on a lot of the what are the new computer companies? Rigotti, those are quantum. All the quantum stocks, people are shorting them on valuations. While the valuations are that they're getting are completely nonsense. It's a theme, and you have the madness of crowds you have to consider. Okay, so the thesis is like, maybe a quick pullback as the stock is touching long-term extension levels. Only looking to hedge a short-term pullback for our Baba position. I'm actually going to move that to the notes. And then thinking some have to start taking chips off the table with massive returns so far. So this is not the best short setup, but it's not terrible. I think there is a trade in here. Now, here's what's going to happen when I hit submit to this particular investment. This bet is not going to have edge. I can already tell you it's not going to work. Okay, it does work. I was thinking that it wouldn't work, but it does have a small edge, 4% Kelly, which, is actually perfect for our portfolio. And I'm just going to, show you an example. So let's say we go, okay, we're going to go short and our entry price is 117. I'm sorry, it's actually 116.56. Exit price, we don't have one yet, so we leave that blank. Our number of shares is based on our portfolio value, which is, let me do it on screen here. So we'll take 121.33, which is our portfolio balance, divided by, times the exposure that we're getting here from the Kelly. So let's start with half Kelly. So let's take a 2% position. There's not a lot of edge here. I wouldn't be taking this in my personal portfolio, but it's kind of fun just to experiment with different things. So we're going to take a 2% position. So let's open up our calculator and then multiply that by 0.02%. So that's a $2,000 position. So $2,004 divided by the share price, which is 116.64. So we're going to short 17 shares. Our entry date is today's date, 13/20/25. And our exit date, we don't have one yet. We're going to add this position. So now we have a short position. And you can see here, we have reduced our total exposure by, this. So take $3,904.89 minus 199,563. So our total market exposure is only 1,994. In a sense, we're trying to hedge. This is not a perfect hedge. This is not necessarily a good idea in a sense, because it's like, there's so many ways this can go. It's like Palantir is AI and Baba is moving on AI, but Baba is also moving on the fact that it is a China theme. Okay. And Palantir is moving in a sense because it's like an ultra high accelerating revenue growth company. So there is not like the greatest hedge, but this is a good little way to use the tool. And what we're going to do here is we're going to rebalance our portfolio. Like if Palantir pulls back to 105, that's when we're going to rebalance this position, okay? So that is how you kind of go about building shorts into your watch list, and, possibly checking your protecting your portfolio from downside moves. the idea is if you are 50% long and 50% short, your shorts should win and your longs should win. And if the market goes up and down, that's when you're able to rebalance. And when the market goes down, you could take your profits from your shorts and deploy them into the long. So instead of having 50-50, maybe you have, as the markets get cheaper, maybe you allocate 60-40 long short, 70-30 long short. So I typically like to try to have some short exposure. In some markets, it's very hard to find short exposure. Believe it or not, it's like, when markets are going up, a lot of the stuff that is really long-term trending is not the best short idea. So I don't like Palantir is at all-time highs. I much rather short something that's like not trending violently, which we will get into, and we will discover some of these stocks as we continue to build out this portfolio. But I wanted to, try something new. Let me know if you guys liked this type of content, and I can do more of it. I'll see you guys in the next one. Peace.